Dear students, I welcome you to the online course on corporate tax planning. Before going into detailed course structure and features of corporate tax planning, I would like to recapitulate some basic concept of taxation which will be relevant to our discussions. Being the student of commerce, whenever we study income tax, we used to refer the Income Tax Act 1961 with the Finance Act of the relevant financial year for easy understanding. As per Income Tax Act, we have to know some concept like persons, assessee, heads of income, gross total income and total income. Because whenever we go into detailed course structure of the corporate tax planning, we should know the preliminary concept like person. As per section 2 subsection 31 of the Income Tax Act 1961, persons are the individual, the Hindu undivided family, the partnership firm, the association of persons, local authority, company and every artificial juridical persons. So, there are 7 types of persons which have been identified by the Income Tax Act 1961. Then you have to know the assessee. As per section 2 subsection 7 of the Act, assessee means a person who pays tax or any sum of money is paid by the person under the Act. Again, we can define the assessee in respect of whom any proceedings has been made for assessment of income or loss under the Act, that is the Income Tax Act. Now, we have come to know the person assessee. There are 5 types of heads of income. As per section 14 of the Income Tax Act 1961, there are 5 heads of income like salary, profits and gains of business or profession, income from house property, capital gains and income from other sources. So, one person or one assessee may have different types of income which will be assessed under these 5 heads. Then you have to know the gross total income. This has been defined under section 80B subsection B of 5 of the Income Tax Act. Gross total income means the aggregation of all incomes which will be assessed under the 5 heads as discussed earlier. Now, the total income. Total income is the actual taxable income on which the assessee has to pay the income tax, that is the total income. This has been defined under section 2 subsection 45 of the Income Tax Act 1961. What is total income? If you determine the gross total income, deduct certain items which are approved by the Income Tax Act. So, after deduction, that is chapter 6 is available for deduction. So, all the deduction to be deducted from gross total income, we will get the total income. Now, we are discussing about the corporate tax planning. So, there are 3 terms: the corporate, the tax and the planning. Corporate, that is the company, that is the assessee or the person who is liable to pay tax under the Income Tax Act against its income. So, this is a corporate, it is an assessee, it is a person. Then come to the tax. Tax means here the income tax. Everybody knows the tax is the important source of income or source of revenue in the hands of the government. But every assessee, whether it is corporate or non-corporate, will try to minimize its tax liability to maximize its net of tax income. And planning? Planning is nothing but a chalk out detailed plan by which one person can minimize its tax liability with the help of various provisions, various deductions, various incentives which has been provided by the Income Tax Act 1961. Now, the question is, why should we learn the subject like corporate tax planning? Basic objective of the course is to know the concept of tax planning, tax avoidance, tax evasion. We will know the various provisions of Income Tax Act relating to deductions, allowances applicable for corporate assessee. There are factors, various factors of tax planning like residential status, that is a source of income or heads of income. So you have to know all these things. Methods of tax planning is very important. We will discuss in the proposed course methods. The short range tax planning, long range tax planning is there. And the most importantly, the various areas of tax planning for corporate assessees, like the nature of the business can be considered, the location of the business can be considered, what will be effect, foreign collaboration. So all the relevant information will be given in the proposed course. This particular course is a 4-credit course. The duration will be 12 weeks and the expected engagement time would be 60 hours. The course is designed to have 5 modules like concept of tax planning, taxation of companies, tax planning with reference to business decisions, double taxation relief, and business tax procedures and management. The entire course will be delivered or supported by the AV lectures, that is audiovisual lectures by experts, text, case studies, and assignments. And after successful completion of this course, you are expected to compute the taxable income and tax payable thereon and the assessment procedures of the corporate assessees. I hope you will enjoy the online learning on corporate tax planning. Wish you all the best. Thank you.